Morning, Steve Free in Chicago with the morning grain comments. Well, markets are higher overnight and most commodities are higher. Sounds like by Monday there'll be some kind of deal on the U.S. debt ceiling. The interesting thing is that the budget office said that by 2053, 38% of our tax revenues will be going to pay down interest on the debt. It doesn't really sound very good for long-term price directions of the U.S. dollar. July soybeans trading at $13.37, up 13 cents. Corn's up 4 cents at $5.95. Chicago wheat up 8 cents at $6.12. Kansas City up 13 at $8.31. Stocks have turned a little bit higher. Dollar's lower. Crude's a little bit higher, and like I said, most commodities are higher. I think the grain markets are dealing, number one, with the weather market. The second week forecast for the U.S. Midwest looks a little drier today. There is a ridge of high pressure that is in the southeast U.S. and will slowly move across the U.S. Midwest to the west. Current maps show that by the end of the 15-day period, it'll be in the western part of the U.S. Now, not quite sure during that whole time frame how much rain can move up with the ridge blocking off moisture from the Gulf into the major parts of the Midwest. The key, obviously, is how far west does that ridge actually move. And so for at least 2 weeks, we're going to see very little rain, especially parts of, let's call it southeast Iowa, Illinois, Indiana, Kentucky, and Missouri. That's the area that might dry out the quickest and stay driest the longest. We also note that the spring wheat areas of Russia are also dry. There is a chance for some showers late in the 2-week time frame, but that's kind of a long way out to trade. Northern Europe is also drying out, but temperatures are near or maybe a little bit below normal. And we are seeing a trend, at least in the interior of Australia, turning drier and very El Nino-ish. Argentina is starting to get some rains, which is also very El Nino-ish. In the cash markets, Brazil corn still cheaper this summer than U.S. corn. Brazil beans still cheaper than U.S. beans, but China demand could be down because of increased cases of COVID. The meal trade yesterday was almost non-existent domestically. We also we noted that in 2024, at least according to USDA numbers, world corn supply outside the United States will increase. In the wheat market, we continue to see, especially Russia and Eastern Europe, wheat prices cheaper than U.S. to especially North African countries. But North Africa and Middle East countries are having trouble buying wheat because of the lack of cash and the lack of supply of hard currency. So in general, you have a supply market that's supportive and a demand market, especially U.S., that is negative. So we're expected to continue to chop around. I wouldn't rule out a test of $14 on July beans. I wouldn't rule out a trade over $6 on July corn, and we'll see if Kansas City wheat can get up closer to the $8.50 and maybe $9 level, which seems to be strong resistance.